Hello and welcome to another update video about the gold chart. Not too much happened since the last update. However, the price has reacted again to our larger support area here in yellow, which is just for this bigger picture, for the larger scenario here, this standard support zone for the B wave in our third wave. The assumption on this chart is that we're currently moving up in a third wave, which is a bullish trend and the most aggressive part of a 5-wave pattern to the upside. Actually need to shift this a little bit over here. The idea is that in this, I can take that out. In this 5-wave pattern, we're dealing with an A, B, C structure. Why is that the case? Because the move up between November 22 and May 23 was also an A, B, C structure. At least it can be considered that way. I can make a case for a 5-wave move here, but then I'm really struggling with this. So it makes sense to me to consider it all an ABC. So ABC in wave 1, because this works. Then A, B, C in wave 3. And then we should get an ABC in wave 5. This works because we are part of, or we're participating currently in, a larger degree 5th wave. And this 5th wave can be an ending diagonal. The situation would be different if we would be moving, or if we were moving in a larger degree 3rd wave. A 3rd wave cannot be a diagonal, which is why it is so important to understand the context when you're labeling a chart. Always from macro to micro, not the other way around, or you don't get the full context. So the idea is that from this October 2023 low, an A wave to the upside in 3 waves completed. We're now in a B wave. You know that B waves are the most difficult waves to forecast and also to trade, to manage. We're basically, you could say, in a range. Now, the range goes down to 1889, which is the 78.6 fib level. And obviously against the latest highs. So for range traders, this is perfect. So you could actually specify the range maybe a little bit, like that. Or just keep it that way, or you use the lows. It doesn't really matter. It's range movement. We're not yet back in this uptrend. I think that's an important realization. Different wave patterns apply here. We wanted to see another low in recent videos that happened. Would still like to see another low, but we talk about the microstructure in a minute because something might be giving us a signal here that we're going a little bit higher, or we might need to change the microstructure. But the idea is, this here is a B wave, and it could be, for example, let's talk about the different structures. It could be a WXY structure here. That's how I've labeled it. So let's start with the wave count that I actually have on the chart. First of all, for anybody who hasn't, who doesn't have so much experience with Elliott wave, the idea is we're in an uptrend, and we currently see this move only as a consolidation or a correction in an overall uptrend. And it seems like this 3rd wave is still unfolding and the C wave hasn't started yet. And by the way, it should take us sort of towards 2,500 plus. But corrections in the metals market are super, super boring. Idea is currently that this is a W, X, Y structure, and the Y wave is an A, B, C. So it's important to realize that in corrective structures, there are numerous possibilities, various possibilities. You typically cannot, let's say, predict which exact pattern a correction takes. Much more important than figuring out what exact pattern the market is following in a correction is to understand what is support, and the support range is defined just to keep the overall bullish case alive. We wanted to hold above 1888 or 1889. And it is very important to be watching for a first 5 up, 3 down move on a smaller time frame. So we want to be watching for that first signal that the downtrend is over, or the consolidation. You see, this isn't even a clear downtrend. It's more a consolidation, maybe even a bit of a triangle, but that would be the next step. Let's first talk about the structure that we're dealing with here. And 1 second, let me just take that out. I think we just take that out and just measure again what we need to measure. We're obviously in this consolidation. And in this WXY, we're now in the ABC, and the C wave is likely unfolding right now. I have to say though that while the wave count from the previous video still applies, in which we talked about, okay, the C wave could be an ending diagonal, that here could be a little bit stronger than what a wave 4 would normally do. Yeah, so it could be a diagonal. C waves can be ending diagonals, 1, 2, 3, 4, and then one more low. In 5, possible. Yeah, would look good, everything okay. It's just that this wave 4 is a little more aggressive than normally a wave 4 would be. I don't normally consider a wave 4 if it moves beyond the golden ratio. It's valid, yeah, so it obviously moved above that 2036 level. It's back below, however, but it's too strong for a reliable fourth wave. It could be one though. It could still be a wave 4 in diagonal. So I leave that wave count as one of the likely options. But it's also possible that something is developing that's a little bit more than a wave 4, maybe already a wave 1 in an uptrend. Let's talk about other options. Other options are triangle. This here is obviously a B wave. So B waves can be triangles. And not unlikely, right? Not unlikely. So in a triangle pattern, this down here could have been the A wave of the B wave. I'm going to change the color in a minute. This here could have been the B wave. Now, this down here could have not been the C wave, or could not be the C wave because we've made a new low here. But it's possible to put the C wave here. It stayed above the low point from the 13th of December. Stayed above that, so it's valid. Then a D and an E. And if we get that, then we have a valid Elliott wave triangle highlighted now in, let's do light blue. Oh, we might not see the difference here. Oh yeah, let's just leave it blue. So that is a valid option as an Elliott wave triangle, a contracting triangle. In that case, the next rally here needs to stop below. Yeah, it actually needs to stop below, below 2098. So we don't want to get above that B wave high. So that shows you this could still extend a bit. We could be in the D wave of the triangle. C waves, by the way, are sometimes complex waves. And this one is complex. D wave could be this, A, B, C. So if it's holding a higher low in any retrace, then yeah, this could be the D wave as long as it stays below that B wave top. And then one more higher low, and then we could go. That's one more option, really. Okay, so again, we can discuss all sorts of patterns here. It's pointless. What's important is to see, do we in any retracement now hold a higher low? I don't know. You know, we have to see what is the support area. I'm going to add one to the chart. It's not a reliable setup, but it would be the first indication that something more happens than a wave 4. And it would be this support area that needs to hold. And again, it could simply be an ABC structure in wave D. I'm going to label that ABC. Make it blue. Yeah. So that's what I would be watching for. But don't think I'm predicting here a D wave, because if support holds, yeah, it could also be something more bullish. It could be a 1-2 setup and we could escalate higher. So the trend is up. We're just watching for a breakout and signals. This would be the first chance for something more bullish to develop. But I'm not going to bring all these potentials onto the chart. So yeah, but essentially it's all about, are we holding a higher low? Support is defined between 2006 and 2024. If yes, then we could get this C wave rally. If it doesn't stop below the B wave high, then we have a case to make that we are breaking out. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, please check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.